In today's video, I'm sharing with you 5 reasons why I'm buying KLIP. KLIP has a 60% dividend, but that's not one of the 5 reasons. I already have 10,000 in the position as well, so I'm going to share with you why I'm buying more KLIP at this moment. We earn over 100,000 per year in dividends at this channel, and this number has gone up recently because I added to KLIP today. And again, I'm going to share with you why. Our performance and value shows that we're also beating the market. Not only are we up today on a daily basis, we're up 0.26%, whereas the S&P is up 0.35, the Nasdaq's up 0.04, and the Dow's up 0.7. So we're in line with the indexes on a daily basis. But on a year-to-date basis, we're up 34% now, 34%. Since my account was up $4,000 yesterday on a $400,000 account, that's 1%. And so every $4,000 you see my account grow, you'll see me grow by 1 basis point in performance. The Dow's up 1, the SP is up 13, the Nasdaq's up 29%. So we're beating all indexes, and we are doing that with an income-based approach. And yes, I use margin. So if I don't explain where I'm getting this performance from, guys, this is where you start to question me, and I get a lot of hate mail, and people will say, well, how are you getting that much performance? Well, then I always talk about Cornerstone. And then if I talk about Cornerstone, I get a lot of hate because people think that the fund sucks, and then it just goes down if you look at it on Portfolio Visualizer. And I say, well, I have to always tell you what's going on with Cornerstone. Cornerstone, it is a 4-star fund, and yes, it goes down on its chart, but it is a 4-star fund that beat the S&P over the last 10 years. See my past videos on Cornerstone if you're interested. Drips the dividend here at $6.49. Drips the other dividends monthly, 21% dividends. They drip at NAV at the $6 price. $6.54 for the 27% gain there. All these gains, 27%, 28%. These are all monthly at the NAV. And again, I have to say this because I'm not going to change my style of investing just to make a better video. By the way, my available draw has grown to about 160, so I don't mind adding to KLIP right here, even though it has 50% maintenance. If you need help understanding margin, email me for my e-guides at akintodd48@gmail.com. So this number is high on my available draw, and KLIP only takes that 50% maintenance, so I don't mind buying 3,000 more. I want to put 15,000 in KLIP total, and so therefore I want to buy 2,000 more to fill out my position, and here's why. Because first of all, the GDP numbers for China are strong. They reported still around 5% GDP, so that's good. Also, here's a 60% dividend for KLIP, by the way. Also, interest rates are falling. You know, while interest rates are rising now, everyone knows I've been making videos on it constantly about a couple months ago even. Interest rates are falling, okay? So that's good for tech companies. So that's good for KLIP because KLIP owns KWEB. It follows KWEB, which are Chinese internet stocks. Okay, so anywhere interest rates fall is good for technology. Okay, I'm going to go to KWEB here in my snapshot so you can see the true underlying of KLIP. Okay, so KWEB's had a pullback. It was at around 35, and now it's at 26, and that's just on a 1-year chart. If you look at it on a 5-year look, it was at over 100. So look at that uptrend we've had for many years in KLIP, and now we're at the rock bottom. So I feel like Chinese stocks are cheap, of course. And so here's another reason why I'm buying KLIP, because a lot of people think China is struggling, and it's done forever since we're decoupling from them. Everyone's onshoring now because they don't want to rely on the supply chain issues and the inflation that we saw from that with China. But China still claims that they're one of the largest trading partners in the world, and it's going to stay that way. So that the decoupling is sort of a myth, in my opinion. I think that we're always going to be relying on China for cheaper goods and services. And then technicals here. Technicals are a strong reason why I'm looking at KWEB or KLIP, because valuations are cheap, as I just showed you on the chart. But then look at the technicals on a 1-year chart. I think things are looking constructive. Yes, we failed the 200 here, the orange line, we failed it. But all the moving averages were getting parallel and close together. When they converge and get parallel and get close together, that's usually the sign of an uptrend firming up. So we don't know for sure, but 25 is a support area. It's in between 25 and 30, which is a good median range to start adding to shares from this pullback at 35. And once again, on a max chart, it's really cheap. You saw that already before. RSI is also cheap. It's taken its breather. Now it has room to resume its uptrend before it reaches overbought of around 80 in that gray area. You know about RSI. If you need help with my technical indicators, understanding RSI and MACDs, I don't have enough time to explain in the video. Email me for my e-guides there at akintodd48@gmail.com. I have volume 1, 2, 3, 4. Volume 1 and 2 are fundamentals and technical analysis. Volume 3 is how to live financially free on margin. Volume 4 is how to play Cornerstone properly. Okay, so technicals are bullish for KWEB. That's why I'm looking at that after the pullback in KWEB. That's another reason why I'm buying KLIP. Also, the dividend yield will cash flow the investment in less than 2 years at a 60% dividend. It doesn't matter what KLIP does. Okay, this is one of the most important themes of my channel. It doesn't matter if these stocks lose that we're in. We collect dividends and they cash flow the losses over time. So even if we're up today $1,600 or whatever it is, in the last few days we've been up a ton. Every day we're making lots of steady capital gains on top of our dividends, because these dividends here are they're substantial at over 100,000 per year, and normally you don't get performance with that. Many channels just get teach dividends, preach dividends without the performance. So I also believe that I can have this much in KLIP at even 15,000, even with this much margin, because international exposure is a small percentage of my portfolio allocation. So if I show you, I don't need to show you my allocation and a pie chart on each trade. I can just show you that, look, if all of my holdings here, the only one that's China based is KLIP. Okay, and then I also have Yang down here, yen. I have a sold put on that. That gave me $2,000, $1,900 just for selling a put on yen, which I'm still up on cost basis wise. So, but I have a Yang short, and I just want to also tell you, by the way, that they eliminated the SWEB short for KLIP, so that got delisted. So you have to use Yang if you're going to hedge KWEB or KLIP in some form. So anyway, I don't think I'm underweight, because I know I'm underweight, because if China is my only holding here, then 15,000, just do the math of KLIP. What's on my account value, which is 400,000? What's 10% of 400,000? That would be 40,000. So Chinese or international exposure, I believe, can represent 5 to 10% of a portfolio. And so I'm definitely underweight that, because 10% would be 40, 5% would be 20. So I'm right at about, I'm almost at about 5%, okay? And I think that that's conservative. So that's how I'm able to, even with margin, even with China being somewhat risky, that's how I'm able to justify buying 15,000 of KLIP and be able to sleep at night. And it's also going to ensure that my performance keeps going the way it's going, because if I keep a small amount in KLIP, then it won't take me down. And then again, I have Yang as a short to offset it, but the dividends are what offset KLIP anyway. So even if KLIP goes down because China goes down, I'm not worried about it, since the dividends cash flow the investment. The dividends pay back all losses as long as the dividends stay. And theoretically, as long as KLIP's volatility stays high, then that 60% dividend should remain elevated as well. So I think that'll do it for the video, guys. I hope you enjoyed it. We're trying to get both days gains and yearly income at this channel, and KLIP is one way to do that. And I have 5 reasons. I thought they were fair reasons why I bought KLIP today. Strong GDP. I'll rehearse that one more time. The 5 reasons were strong GDP, interest rates are falling, decoupling being a myth, the technicals being strong for KLIP, and the dividend will cash flow the investment anyway in less than, let's say, 3 years. So hope you enjoyed it, guys. Email me at akintodd48@gmail.com if you have any other questions on my guides, and I'll talk to you soon. Thanks.